Boom, boom, boom. Good morning, traders, and welcome back to another episode of Market in the Morning. We've got a special episode today because it's not only Wednesday. We're not only having Imre on. We're not only having special guest in the lab on for his birthday, but we have CPI in about 8 minutes, and this is going to be big. We saw the reaction we got from non-farm payroll last week. It was way above expectations. If we see the same reaction where we're above expectations on CPI, expect a huge reaction in the stock market. So let's get ready to make some money because Market in the Morning starts right now. Imre, good morning, man. How are you?
Good morning, Kevin. I'm doing great, man. How are you?
Bro, I'm great too, man. I'm excited for CPI today.
Yeah, me too. I mean, we've seen how explosive these news releases have been in terms of volatility for traders. And the best part is you don't have to be a day trader. Even if you're swing trading, these news events have generated some nice follow-through action as well.
Yep, absolutely. Absolutely. Let's break right down into it. I'm going to share your screen. Let's go over some CPI, what to expect, how markets should be reacting, and so on.
All right. Yeah, let's do it. So, chat, how cool is this? We've got the Chrome extension for TradingView, right? So we can go over separately, maybe a little bit later in terms of how to add it, but you now have the most powerful features of Market AI straight in your TradingView dashboard as well. So what I'm looking at right now is the calendar, and we can see we've got CPI coming up. We have that next, and I can hit that brain icon, the same one that you guys know and love, in the main market terminal, and we can see what our min-max ranges are, and we can see where we need that report to fall in order to generate an explosive reaction from the market. Now, what I love to do is I love to pair that with my own technical outlook and levels for the market. So here's what we're looking at in the S&P 500. We're going to run through a couple of markets here and the potential impact. Beautiful. I had a downside target get hit yesterday. I've got another one a little bit lower at 70, spanning 7184 to 7209. And I think short term, I can start adding another little area of resistance right here on the edge of this profile, spanning approximately 73, 78 to about 73, 61 or so. I want to see how we deal with that intermediate area. But for me, the parameters are fairly straightforward. So long as we're below my control zone and I'm looking for further downside, as we trade back towards the control zone, I get increasingly neutral. Now, the CPI report, I would expect it to generate some decent volatility because there is a lot going on in terms of market news and market expectations right now. On top of course, this economic release that's planned, and we know it's coming out, there have been headlines, geopolitical headlines around the conflict with Iran and how that is starting to flare up and kick off all over again, right? So we're obviously going to keep an eye on that. And the Iranians are not stupid. They know that Trump watches the stock market. They know, and they know that certain actions that they may or may not take, certain statements that they may or may not make can have an impact on market volatility. Let's take a look at gold real quick. We're approaching what is, I thought, I had these levels laid out at the end of last week, and we're now approaching my final downside target at 4107. Doesn't mean that there is not scope for gold to trade lower, but once we breach 4107, I really want to take a bit of a step back here and see what's going on. So I would wait for 4107, and I think there is potential to trade maybe as low as around 3981, but I really want to see what's going on at that point, and it's all going to depend on that CPI report as well. One thing, this is a trading tip, guys. I never want to short through a hole. What does that mean? It means we have a low here. We have a spike low at 4,100. If you're shorting a break below 4,100, just accept that you are likely going to get stopped out on a bit of a pullback here through that level. So do not chase the breakdown. That breakdown can lead very quickly to a move lower, perhaps to that downside target zone I just put on, but wait for the pullback. Sometimes you'll miss the trade. More often than not, you'll be glad you waited. And then the final major market that I always keep an eye on, especially with these renewed tensions is going to be crude. So same deal as the S&P 500. I've got a control zone here spanning $97 to $94 in crude. We touched down into my first downside target again, which is that support zone spanning 88.86. My parameters here are pretty clear. Breaking below that support zone, I can look for 80. Otherwise, if we see a strong buying response holding above the support zone, I can look for rotation back towards the control zone. Above the control zone, I've got my upside targets. And then let's take a look at the dollar index. Sorry, guys, for speeding through this. We've got the news release coming out in just a couple of minutes, but let's take a look at the dollar index. The dollar index to me does not look super bearish, nor does it necessarily look outright bullish to me in the very, very short term. As you can see, we've had this 5% range basically since June of last year, right? And where are we right now? We're nearing the upper end of that range. So there is room for the dollar index to trade a little bit higher into that range. Could be off the back of the CPI report. But again, what am I looking at? I'm probably looking for dollar weakness if we start breaching 100 plus in the index. And then I'd be looking for rotation lower. So we have essentially like what I would say is the fair value area for the index. And we can see that spikes below have been rejected, right? So there is definitely a lot of support here for the dollar, and with inflationary concerns resurfacing, this is definitely an index we obviously want to be keeping an eye on.
Imre, I hate to interrupt, but I think we're going to bring on the lab right now as well to
join
let's
do it. Let's bring on the birthday boy.
What's up, man? We got like 20 seconds. Let's bring the focus back on CPI before we start talking about it. We got CPI in just a few minutes. What's up, guys? I saw the awesome breakdown. Imre on point as always.
Dude.
Yeah, so let's watch this. We can see that gold has just absolutely dumped overnight on Fed hawkish repricing, plus just pricing in the hotter CPI. Markets are already expecting outright on forecast within the minimum and maximum range here. So you can see how this is exactly within the range we talked about. So volatility isn't going to be as great as it was if it was outside of the 4.1 or 4.3. In this case, being contained right at 4.2, which is the forecast that the markets were already expecting. We were already expecting a 0.4% increase. So now we can dive into the chart and see how the markets are actually digesting this. And I'll put my screen up if that's cool, Kevin.
Of course, bro. Absolutely. Yeah, share that and we'll pull that up. CPI just came out. Looks like it is right on expected, 4.2.
4.2, unexpected. And exactly what we talked about yesterday, that we were looking to position ourselves for CPI going into Wednesday. And that's exactly what we did on gold, right? We saw equities dump deeper than our lower targets, but gold presented us a great target opportunity. We milked the 1,600 points, $160 drop on gold overnight. And now what we can see is that the CPI came out exactly at expectations. And what I would love to see on an intraday basis is to see that corrective phase start. We are almost filling that entire range that we talked about when we initially had gold do its corrective phase back in March. We talked about it. Kevin and I have been talking about it that, hey, eventually gold is going to come back down. Inflation fears, Fed, a hawkish focus is back on the table. We're going to make our way down and we're almost here. So I would love to see some sort of intraday pullback, or even sellers are just going to dump this. Like they're going to continue dumping this right to the target. This may even be setting up for entries, give or take the whiplashes. And then once the noise and dust is settled, I think gold is easily going to make its way right back to the low target here, 4,100.
Yep. I'm with you on that, man. We've been calling gold short since our feet for months now.
Right? It's just clockwork. It's if you're just positioned with what's going on in the actual markets, and gold has had this bearish bias since the start of the war, literally since the start of the war. This was the peak. This was Sunday market open for the war, and then we've been bearish since. So This isn't like a coincidence where gold trend just randomly changed. Gold has been bearish since March. It hasn't been bullish. This bullish move again was relative to this massive drop that we had, and doesn't shift out of the macro narrative that gold is going to remain more heavily seller concentrated.
Yep. Awesome, man. Good breakdown. Good
But
breakdown. What do you
yesterday's trade, if we saw it played out perfectly, and if you guys remember, what we were actually looking for and how we had to adapt was, hey, we were looking to take those sells near 43.75. And then we went into the lower time frame and we talked about, hey guys, this is where the fireworks start to happen. And we noticed, let me just hide this real quick. And we noticed that if price can't maintain above 43.50s, as soon as we snap back above, we're going to enter those shorts. Exactly what we did. As soon as lower time frame price action snapped back above, we entered right here. And then the rest is history. It just played out overnight perfectly. We were positioned for CPI, just like how last Thursday we were positioned ahead of time for NFP. And we were in those shorts 12, 15 hours ahead of time. So it's positioning yourself, taking advantage of the opportunity, and then knowing, okay, CPI came out on forecast. Markets aren't going to like dump cold right now. So likely you're going to see some sort of corrective structure, whether that sells off from here or whether it pushes up to this known seller area that we saw sellers jump in overnight during London hours. So again, you don't have to trade the release. This is why you don't use a buy stop, sell stop, because it's just better to understand what this data means for the markets. In this case, when you pull up the playbook here, you can see a reading of 4.2s. You're going to get more ranging conditions on the dollar. If it's on gold, again, anything higher than 4.2, 4.25, 4.3 would have had the bearish impact immediately on gold. But the fact is that we came right on forecast, something that the markets were already expecting. This print was already like forecasted weeks ago. We knew weeks ago, and Imri talked about it too, is that, hey, the fourth month of this CPI print is where we're going to really see the impact trickle in. And that's exactly what this is, the fourth month going into the war. And we're seeing that massive increase. We saw an increase last time. We see another increase now. But again, just remain within the range, unlike NFP, which provided that clean one-sided volatility in the markets because it was just an absolute blew it out of the water of the maximum expectation. So in this case, I personally think that eventually, whether it's from this area or 42.25, that gold's going to fade this and continue to dump towards the downside. What do you guys think?
Yeah, definitely with you on that. Gold's just going to continue to the downside. I think even though it came in within expectations, it's still 4.2% on CPI. Yeah. You know, that's still a massive increase from 2.4% just like 2 or 3 months ago.
Exactly.
What are your thoughts?
Man, so here's the thing, right? And this is where my head is at on this. We have definitely started to see the inflationary expectations pick up, as we've been saying all along, right? And talking about the lagging effect. What we're now seeing is that repricing starting to happen. And that repricing for me has happened a little bit faster than I would have expected, particularly for I would say gold, particularly for certain stocks. Now here's the thing where this all comes together for me. You can say on the one hand that the stock market made new all-time highs off the back of bearish headlines. We're climbing that proverbial wall of worry. I don't think that's actually true. I think pretty much 7 stocks climbed the wall of worry, and we have like 493 stocks that are kind of languishing and doing nothing. This is a very narrow market in terms of breadth, in terms of which stocks are advancing versus which ones are declining. And that, I think, has investors, the big boys, on edge. Now, that's nothing new. We've had that kind of market for a long, long time. But when you start seeing these concerns start to spill over into those other big stocks, now investors have some decisions to make. They have to make a decision in terms of whether we rotate into value-based names. Do we look at alternative assets? Do we start moving money around? And that's going to result in what? Probably to a degree, at least some rotation out of those AI stocks, which is what we've been seeing, right? So I think from a day trading perspective, all this stuff is still really important to keep in mind, especially when you're overlaying that with a news event like CPI, right? So I think that's going to be really, really important, because when we have a range like this, where the news release came out within that expected range, you know, you're not going to trade the immediate burst of volatility from that event anyway. So what we want to wait now is still sticking to that bigger picture bias, bigger picture macro bias that tells us with confidence and clarity which side of the market we want to be on. We then want to wait for technical levels to get triggered, and then we want to see whether we're getting a directional movement in line with that bias. Like that's how I would structure the trading plan, especially for, for something like today. So with gold, what we're looking at right now, what do we see here? We have all these highs. We have all this resistance here. I would love to see a little spike above here. I'd love to see some buyers get trapped. Potentially we could get a move back down into range. We'll have to wait and see, obviously, how we deal with this area, but there is clearly, objectively, a ton of supply, right? And again, from a trading perspective, that's how I want to think about my trading. I don't want to be guessing. I want to be able to clearly, black and white, say what happened here. What happened here is buyers ran into a wall of selling, right? Now we have a CPI report that doesn't make us tremendously, dollar bearish all of a sudden, but as I mentioned, when we're looking at the dollar index, we do have to keep in mind we're near the top of what has been a long-standing range. So there could be room here for the dollar to go up a little bit. We could expect that to coincide with another sell-off in gold, taking us to our final downside target. I'm front running it a little bit, front running it $7 ahead, but.
Awesome. No, what are you thinking? What are you seeing, man? You want to pull up your chart?
Same thing, man. I've been, I tell my screenshot. I've been in those gold shorts. I'm still holding my position from last Thursday. I'm still running with that. I had closed my runner that we called out on Tuesday. So Tuesday, Thursday, Friday, those sells have just continued to play out. Everything's routine. In the past 4 months, I have not taken a buy position on gold. I've just been purely aligned with actually riding every single pullback we've had. We faded it. On market in the morning, whether it's like on Asian session, whenever it happens, every one of these pullbacks have gone faded. And I just personally love taking a position and just letting it play out. I don't like being on the charts. I have so many other things to do. So for me, a positioning like this, where I can position myself before CPI alongside the entire trend, given those lower time frame confirms of price not being able to, exactly what Imri broke down, sellers couldn't hold this area. We got buyers trapped in. And I mentioned it, I'm like, guys, don't look for those breakout buys. Even though you may see lower time frame price action just go up 200 pips, $20 up to 37.75. I'm like, the sellers are waiting. We didn't get that. We got buyers trapped. As soon as we snap back below, we had that outflow. So I'm personally still holding this position. Plus, as Imri was saying, I was also front running these. So I'm trying to see how this would play out as well. From this area, as I talked about, that if we can hold this and sellers can hold this, then the CPI move, this dud CPI move, is going to get faded out. We get breaks below here, and guess what? Maybe over the course of the next 2 hours, we end up doing something that can bring us down to here. And then guess what? Now we're back to these intraday lows that were printed in the initial downpour that we saw on gold. When this was also like when Kevin Warsh was also nominated into Fed. As a Fed chairman. So this is that exact low. We're right near it. I wouldn't be surprised if we dump right past this low. Like I would not be surprised if we just absolutely dump past it. Just like how we did on ES yesterday. We completely smashed this, went right to 72.40. And now we have just, again, closing above 7,300. So I'm still in that same idea that Imri brought up. I don't even mind that if the other side of this happens exactly how it did yesterday, where we push up slightly, maybe up to this area, and then instantly, as soon as we start closing below, we head down, which is fine, which doesn't change anything. You're still in a bearish trend. You're still getting these lower highs, lower lows printed. So just because you pop up here, or even if you pop up here and then the market goes down, that's fine. Like this is just market psychology. This is pricing. And there's not much you can do about it besides just, hey, cut your losses maybe and then look to re-enter once there's better confirms. So that's same thing, same bias, I've been following this perfectly from the past 3 months. I look for a pullback area. I go to my charts. I look at my levels. I understand, hey, if price reaches a specific area I'm watching out for, that's all I'm going to do. I'm just going to wait till it gets there. If I'm waiting for 42.25 to take a short on gold on CFDs, I'm not looking to sell gold when it's at 4,100 and the trade's running without me. That's stupid. Like if I have a price point in mind that I'm really looking to position myself for, Why would I take any other price point that's worse than that, right? It's the same principle that we were talking about last week during NFP downpour. That, hey, don't get caught up in trying to sell these lows. Yeah, we might dump until end of the day, but you're going to get that pullback next week. And early on in next week, the market set up and absolutely dumped just as much as it did NFP and more. So it's the patient game, right? Like you can either come to the chart and act like a monkey or fight against that urge and let your dominant part of your brain take over and map out these scenarios and then follow them. Like that's the main thing. You plan these scenarios, you sit on your hands and you let the market come to you. And then guess what? You're on the plate and now you have to swing the bat. So you swing the bat because eventually the more you swing, the more conviction you'll build, the easier it'll be to come to market to be like, hey, every single day I come here, I look at the day trading bias, I look at what's actually causing this and supporting this right now, or what could flip it. You'll often see flip watch come up here, any core events, and then guess what? Now I'm more prepared. I know this is a pullback area where gold in its higher bands of the intraday can pull up to before we see sellers jump in. And then this is my lower target for gold. For if I'm in a short, this is where I'm looking to target in the intraday period. Now I have a better picture if so I have a way better picture now than I would have if I came to the charts and I had nothing else here besides the candles to look at. Yeah, candles tell you something, but when you look at massive moves like this, you should be able to tell exactly what took place during this period. If you come to the market you trade and you have no idea what's powering it, then you're just trying to break down bars of lines, right? Like there's nothing else. That there's a whole story behind each one of these massive plays, and if you can't tell it, then it's going to be hard to continue thriving in these markets. So to sum it up, yeah, man, I'm still holding the same gold shorts from yesterday, from Thursday, so pre-NFP, pre-CPI, and then this would be more of my intraday play that I just ride down to this low target that we've had for forever now.
No, that's awesome. So you're still holding the shorts. Now, when you're in profit like this, right, obviously markets have moved very much in your favor. Are you trailing your stop loss to recent lower highs so you're locking in case price does?
Yeah, so what I usually do is I'll leave like 5 to 10% of my original position sizing, right? So I'll leave 10% of that, 5% of that, and then I'll move the stop loss to break even, or I'll start moving it to the last major high. So in this case, for this position, by the time we were down here, I had mentioned, hey, I had already moved this to break even on the intraday period, even though this was 2 days ago, 2 days before Thursday's setup played out. And then once NFP kicked in, guess what? This position gets moved into profit now, the runner for this. And then the same with this. Once you break these lows, boom, I can now move this deeper in. So a lot of these positions are just runners going, right? But some of these runners have exceeded my own expectations, right? And I think that's what's amazing is that I went from 3 years ago catching 10 pips, 20 pips on gold and like kind of chasing that on the lower time frame to now being able to position myself on an intraday period where I can catch the larger moves and I understand them. I don't get phased out when I see price action on my screen like this that clearly majority of the people would think of as bullish price action. I understand that, hey, there's sellers sitting up here. Exactly what Imri had drawn out on his 15-minute chart on gold on the lower time frame chart showing that, hey, sellers are here. If we pop up, trap the buyers, induce some sellers into the market, that's likely where the move's going to start. And same principle, but just on a higher time frame. So the market just move the same regardless of any time frame you're in. If you're a scalper, it doesn't matter. You still are taking advantage of the day trading bias and what the markets are really moving towards in that day. In this case, focus being CPI, but also that pricing of the hawkish repricing that we were talking about and further escalations that are continuing to happen. As we know that ceasefire is almost like a figment of our imagination. We hear about it. It's like it's a mythical creature. We hear about it and then it's gone. And then you hear the next escalation comes in. So we knew that this wasn't going away, right? Any minor escalation that happens, de-escalation that happens, eventually gets faded out, and then you see missiles going back and forth. So just keep focused. Don't get too caught up. You have the breaking news tab for a reason where you see what actually is impacting markets. You don't have to sit and scan thousands of headlines. We made these filters and we made these workflows easier so you can actually see the high impact plays that are ongoing. But guys, so sorry I have to jump out. I just want to jump in quickly. CPI day. Thank you, both of you. Amazing. I'll be watching. I'll be staying tuned. So thanks, guys.
Absolutely,
Thanks,
bro.
man.
Thank you for being here. Happy birthday. Thank you
Thank
for
you.
building such a great platform. Don't leave the studio. Just hang out in the back because of the local recordings, but
Sure.
you're good to go.
Awesome.
Appreciate you, man.
Take care. Bye.
Later. Emery, man. Let's run this back now. Now, what are you looking at? Now, obviously, S&P 500, NASDAQ, crazy pullback. NASDAQ had like a 200-point candle right there, but we have to realize the range we're trading in right now, right?
Yeah, that's right. And this is where, so CFDs and futures, two very different products. You might think, well, what's the difference? The difference is that with CFDs, your position sizing can be extremely granular. But with a futures market, your position sizing is limited. You cannot trade a smaller position than a micro contract, right? So when volatility expands, and guys, this is a trading tip. Like we'll go to NASDAQ, for instance, and we're going to pull up an indicator called the ATR, which stands for average true range. And we can see here that the average true range, can get rid of the RSI. The average true range on a 1 minute chart right now is 43.5 points. Wow. That is huge. That is huge for a 1 minute price chart. And we can see how the ATR has exploded, right? Starting from around 8 a.m. And of course, with 8:30 a.m. Now, I would expect the ATR to kind of stabilize a little bit as we head into the cash open. But right now, volatility remains elevated. So what that tells me is that at minimum, if you don't have a 40+ point stop on NASDAQ right now, you're likely to get wicked out by just noise, by just normal expected volatility. That is the normal expected volatility over a 1 minute time frame. And even if we look at the dailies, we can see how much volatility has expanded recently. We're getting an average range each day of over 650 points right now. That is a day trader's paradise. But it also means that you need to size down if you want to keep your accounts safe. So when you get ranges like that, it's even more important to wait for the market to reach an area that you have identified in advance. There are basically two types of trades you can take. And I'm just going to use bullish examples right now. You can either buy on strength, which is as the market's going up, you're willing to buy near the highs. In other words, you're buying momentum. The other thing that you can do if you want to be a buyer, and you just flip this if you're a seller, is you buy on weakness. You buy as the market is selling off. Now, generally speaking, by definition, if you're buying strength, if you're buying momentum, you're paying retail prices. If you're buying weakness, you're paying more wholesale prices, a relative discount. Now, that doesn't mean you never want to buy retail prices. It doesn't mean you never want to buy breakouts. But my criteria for when I have a breakout is very straightforward. There has to be a catalyst. There has to be something that's going to drive that aggressive market behavior. So if that CPI report came in super hot, I would be trading more so on momentum than waiting for pullbacks, right? But that's not what we got. We didn't get that. So when we didn't get that, what I'm looking for is for momentum to start fading. So for example, something in gold, I'd still love to see a return to these highs. Let's see if we get something up there. If not, then it's, do we consolidate here? And then do we get a run on those highs and then a move down, right? But either way, with that CPI report coming in range, I'm now expecting this initial burst of volatility that we got off the back of the report to die down a little bit. Let's see the market consolidate, and then buyers and sellers will show their hands. Once they show their hands, it's like in poker. Everyone's got cards, everyone's bluffing. At some point in time, you got to go heads up and you got to see what everybody is holding, right? That's when I want to trade. I want to trade when it's extremely clear what buyers want, what sellers want, because then I can identify where one side or the other is going to get trapped and where the other side's going to win.
Perfect. And I'm glad you mentioned about sizing down, because I feel like a lot of times newer traders get the idea that, wow, we're having these huge moves. Let me keep my size the same so I can make more money. But it's the complete opposite. Like you said, if you keep your size the same, but need to drag your stop loss 4 times your normal stop loss size, you're risking 4 times your normal risk.
Yeah, exactly. And like, guys, I was sizing down on my personal account, yesterday. I was trading a lot smaller size than I normally would. I mean, like I was trading 2 minis on NQ, which for me is a lot smaller than I would normally do. It's a fraction of the size I would normally do. And I'm still making the same amount of money that I would be making, if I was taking normal size on a lower volatility day. So the difference then is, okay, well, doesn't that mean you're kind of letting the volatility slip by you? You're not taking advantage of it. Well, the difference is when you have that much volatility, you're going to have more opportunities to get into trades as well, right? So I'm going to be a lot more active with my trading when there is volatility. I'm going to use the larger term macro bias that we're leveraging through the market terminal. And I'm going to pair that with my technical reads, right? And that's the most powerful thing. As Nalab said, candlesticks are fantastic for a very specific purpose, and that purpose is for timing the market and for defining risk. And that's technical analysis. The point is to use it to time the market and to define risk. For a larger term directional view, I'm not really looking at candlestick charts. I really want to be analyzing the macro first and foremost, and then using that in turn with price action, with technical analysis to trade in line with what that larger bias might be.
Awesome. Something I would like to see off the open, right, is I'd sort of like to see these buyers continue a little higher on NASDAQ, on ES, maybe possibly come back to where we closed yesterday around that 4 p.m. Eastern. Get a lot of people on the wrong side of the market thinking, wow, here's our reversal. CPI wasn't much higher than expected. It was on expectations. But again, it's still high, right? 3.8% to 4.2%. This is still causing a lot of pressure on the Fed.
Oh yeah, and if we take a look at bond yields, we can see, look at this beautiful symmetrical triangle in the 10-year. If we break out of this, that tells you right then and there what the market thinks about the direction monetary policy has to take in the intermediate term. And we can look at the shorter dates as well. We can see the two-year yields have nicely broken out and are not really backing off. And we can see that with the 30-year, the longer term as well. We also have a compression pattern here where we're starting to threaten the upper boundaries, right? So really, really important here to keep in mind that what is driving all of this is energy. It's fundamentally going to be higher energy costs, which are going to filter through the real economy, which is in turn going to put tremendous pressure on the Federal Reserve. Now, here's the thing. Inflation does not exist in a vacuum, all right? So every country is going to be dependent on other countries for trade, for commodities. The US is not independent in any way, shape, or form. China has proven that with their stranglehold on rare earths, right? And they have flexed that muscle. And the US kind of had an oh shit moment where they're like, okay, we need to lessen our dependence on China, but we cannot eliminate our dependence on China whatsoever. And China needs the US. China needs the US to grow their economy as well. So where this matters with the oil story is that even if the US Federal Reserve can keep monetary policy somewhat dovish, not ultra hawkish, well, what about other central banks around the world? They're going to have to fight inflation. That's going to create a drag on their economies. And what's that going to result in? Fewer people around the world buying US goods, for instance. It can mean layoffs in other countries. It can mean increases in prices for the raw commodities, for the finished products as well. And like it or not, that is going to have an impact on what's happening domestically in the US. And that in turn is going to shape monetary policy as well. So no central bank exists in a vacuum, right? They're all in it together. And that is really, really important to understand. It's so important to understand because central banks might raise or lower rates at varying paces. Like the Fed might lag the ECB, for instance, and the Bank of Japan is hanging on by their fingertips. Bank of Canada does not want to raise rates because Canada is in an economic recession right now. But ultimately, central banks, eventually the big ones, will probably all get on the same page. It's just a matter of how long it's going to take.
Awesome. So let's talk a little bit, let's talk a little bit about inflation. Us hitting 4.2%, obviously within expectations, but 4.2% is the highest point we've seen CPI since, I believe it was April 2023, when we were coming down from those peaks of 9.1%. Seeing this, seeing the steady incline from your perspective, from your history in the markets, what does this usually lead into in the stock market?
Okay, so it's not necessarily that higher inflation means higher rates, which means worse performance for stocks. The relationship is not quite that linear. It's not quite that simple. Higher inflation can mean an overheating economy for sure. There is a sweet spot, but that 2% target that the Fed came up with is utterly arbitrary, and I would not be surprised to see a move away from that 2% in future press releases or statements or anything along those lines. The real thing with inflation is to understand what inflation truly is and what it truly is not. Bear with me, guys, but if you can understand this, you will have a better grasp of inflation than, I swear, any economics professor or teacher you will ever talk to. Let's think of the word inflation literally for a moment. Does the price of goods inflate or deflate? It actually does not. Prices don't inflate or deflate. Prices go up and down. So what does inflate? When we're talking about inflation, what does inflation actually mean? It does not mean prices going up or going down. That is the impact of inflation. What inflation actually means, and no economics professor is going to tell you this, what inflation actually means is an expansion of the monetary supply. So the monetary supply is what's inflating. And in turn, what does that typically mean? It means lower barriers to accessing credit. In other words, borrowing costs. And borrowing costs is what makes the world go round. Now, there are two types of borrowing. There is what is called self-liquidating debt and non-self-liquidating debt. So if you're putting something on a credit card, if you had a big night out, got the bottle service in the booth, and you're putting that on your Platinum Amex, that is non-self-liquidating debt. That debt will not pay for itself. I shouldn't say that outright. That debt is probably not paying for itself unless you're signing some crazy business deal in the club. But if you're a company and you're taking on a lot of debt and you're using it to invest in equipment, in people, in research and development, yes, you're borrowing money, but the expectation is you're going to realize an ROI, a return on that borrowing, a return on that investment. Okay. Now think about the debt that most people take on. Is it self-liquidating or non-self-liquidating? In other words, is it the bad debt or is it the good debt? It's almost always the bad debt. So there is a big difference in terms of how inflation affects consumers and how it in fact impacts corporations. So if you're a corporation and your borrowing costs are suddenly going up because prices are increasing due to the economy overheating, what's that going to mean? It's going to mean you're going to have to lay off staff. It means you're not going to be able to, you might have to raise prices for your products, which means people are going to find them less affordable. And it creates a feedback loop. And when that makes prices more affordable, people will either put more things on their credit card and then eventually they'll default on those credit cards. And that's what causes stress and strain on the economy. So how does this all impact the market here and now? Like if we're bringing it back to practicalities in the here and now, the answer is nothing. As boring as that might sound, the answer immediately right here, right now is nothing. Why? Why is the answer nothing? Because if we go to our interest rate tracker, have the expectations significantly changed in the very short term? And the answer is, I don't think so. But if we start looking a little bit further out to September, that is when things start getting a little bit spicier.
Yeah.
Right? Now, how do you make use of this information as a trader? Well, if you believe that the inflation narrative is really going to surface, because here's the thing, markets are so short-sighted, yet simultaneously extremely forward-looking. And I mean short-sighted in the sense that we all know that inflation is going to be an issue in September, but nobody's willing to do anything about that right now. That's tomorrow's problem. It's not today's problem. So if you have the patience and the discipline to position yourself ahead of time, just like how, from the beginning of this war, like Nilab's been short gold, crushing it, absolutely crushing it, if you have the patience to let those ideas play out and you have the conviction in those ideas, that's how you hit home runs as a trader. That's how you hit home runs. And on a day-to-day basis, you're going to look for those base hits. But one thing that remains the same, no matter what, is you have to be willing to swing the bat, which means you're going to miss some pitches. You're going to miss some pitches.
Yep.
You cannot be afraid to strike out every now and then, because
right.
you will. You can't avoid that. What you want to do is not blow up in the process of striking out, right? So with gold, like I'm just watching gold, the action right here, very short term. You know, we can see gold is starting to tick up a little bit. This is where I start getting interested. So I've got a couple of short-term trading plans here, folks. Number
awesome.
one.
Let me show your screen. There we go.
All right. So number one is we have this area of supply right here. You know, we can see that the market's starting to react to it. Sorry, guys, we're a little bit late. So one trade idea, for instance, is, okay, we're seeing some absorption of those buyers. We're seeing a move back down. Even getting back down to the little swing low there gets you 2.5. And if you want to play for that longer term move on an intraday basis, you're going to get a very nice 4-to-1 on your money. And if you get stopped out, here's the important thing. It's not a big deal. It should not matter. It should not have an impact on your overall account. What matters is the logic sound? Is there a reason to take the trade? Is there a reason to swing the bat? And if the answer is yes, then it's a matter of managing the risk on the trade. My preferred scenario, what I would really want to see, and this is how I trade personally, I have plan A's and plan B's. This is very much a plan B scenario. Plan A is still seeing a move back to this long-standing resistance area, and let's see if we can poke above it or if we fail utterly. That's what's going to get me that real pricing at a relative premium, because I'm a seller. I want to sell at a premium. I don't want to sell it into a hole at discounted pricing already. Okay. So when I have a plan A scenario and I have a plan B scenario, what do I do? Am I taking more size on the plan A or more size on the plan B? Obviously, I'm going to take a lot more size on the plan A trade. Plan B trades are the ones where if they don't work out, you don't even feel it. It's not even a paper cut. But if it does work out, at least you're up a little bit something on the day. And you can say, hey, I didn't miss that move, right? So that's personally how I like to allocate risk. I identified the plan A scenario, identified plan B and C scenarios, and I don't size all my trades equally. I take far less risk on something that's less likely to work out or is a lower quality trade.
Awesome, man. Awesome. I like what you said before. So, don't be afraid to take those trades. Take a paper cut, right? You miss 100% of the shots you don't take.
Oh, man, I don't know if I can pull this screenshot up. It was a crazy day for me yesterday. Oh, man, can't. Let me see.
I'm definitely, guys, while Imre pulls that up, I'm definitely going to be a bit patient myself on looking for any entries for the ES and NQ. Probably going to be waiting for New York session to open, right? We get more volume, we get some follow through. I would love to see sort of what we saw yesterday in that we got a pump higher first, right? We got to move up. Here we go on the 5-minute time frame. Remember, NASDAQ moved up into that resistance. ES moved up, broke previous day high. This was previous day high right here. Closed right back below it, triggered our short position, and the ES went crazy to the downside. NASDAQ also 200 points on ES yesterday. That is insane. And NASDAQ, guys, from Market in the Morning's live stream, we gave you those shorts. Even if you took them anywhere up here, leaves room for over 1,400 points to the downside on NASDAQ. This was called out here in Market in the Morning yesterday with me and Nawab. So, Imre, you found what you're looking for, G?
Yeah. Okay. So this is more of a trading lesson, guys, just to walk you through, and you can see my executions here. This is my little personal live account that I like to have fun on volatile days. All right. So you can see the trades that I took a lot of trades. This isn't even all of them. I took a bunch on the S&P 500 as well. But look, I'm getting in. I didn't get the reaction I wanted, so I got out, right? So I got out very quickly, trimmed some here, bought here, trimmed some. I got stopped out on a runner, took a loss here, and then finally I got the real move that I was looking for. So I swung my bat a bunch of times, guys. I swung my bat over and over and over again, and I was hitting foul balls. You know, I got on base, and then finally, you know, I got the home run I was looking for. And that's on it's a 2-lot trade. It's very small size relative, you know, to what I'd be trading if we had a lot lower volatility. But when you have that expansion in volatility, you can still make decent money. You can still make reasonably good money, even if you are sizing down. You let the volatility, the expansion and the volatility do it for you.
Awesome, man. Awesome. Guys, make sure you run the like button up. Dropping some sauce here today. Absolutely killer. Imre, thank you so much for showing that. Now, let's set up traders with some key levels to keep an eye on. So here we're looking at GC gold, right? Now we could fade out this old demand zone that we had. This is an area where buyers were present in the market in the past. I'll show you guys where I found that on the hourly, right? This big zone down here was our last peak to the downside when we had that initial sell-off. So when we look at the daily time frame, that area of support is right over here, right at that bottom wick down over here. So the fact that we're starting to scale and break below it here on GC, we haven't broken below it on XAU USD just yet. We most likely will. I do want to see that momentum just really tear people's faces off on gold to the downside, right? A lot of people who were buying, boom, end up selling. Yeah, let's get the Chrome extension, guys. The market Chrome extension. Let me get the link in here for you guys. You guys could check that out here too. All market users get the chance to use the Chrome extension. That is this fun little gadget right up here. You get market right on your trading view terminal. How cool is that? You got your calendar. You have your live news. You know, I wanted to cover live news too. We had some big headlines yesterday, and Imre, I'd love to get your insight on that. Just sort of over the U.S. bombing and attacking Iran again. What are your thoughts? You know, are markets going to start selling off stronger because of that? What are you thinking?
Yeah, all right, let's talk about it. So what we've seen is desperately Trump administration insiders saying how this is not a big deal and it's little, you know, it's just a little bit of an escalation, a little flare up, but it does not severely impact peace talks. Like hell it doesn't. I mean, I'm sorry. Like I'm in Toronto right now. If missiles flew from New York to Toronto, yeah, like what peace talks? I mean, it just doesn't quite work that way, does it? So what we're seeing here is a marked escalation, the biggest escalation, you know, since the U.S. concluded their bombing runs. Things are very tense right now. Things are very tense, and I just don't see a clean way out here. I think there's going to be noise every now and then about progress being made. If you ask my personal opinion, I think the Iranians are playing Trump like a fiddle, and you know, and Trump is desperate to be giving some good news to his base, especially with midterms coming up. The closer we've been very consistent with saying this, the closer and closer we get to midterms, the worse and worse this becomes, and the harder this situation becomes to salvage. Now, markets have made a new all-time high that gave Trump some breathing room. But if oil stays elevated and the Iranians aren't stupid, they know exactly what they're doing, it's going to put a lot more pressure on the U.S., right? So it's not that just the escalation is what's causing markets to sell off. It's the worry that this is going to keep oil prices elevated. It's the worry that this is going to be a persistent drag on inflation. It's the worry that the longer that this drags on, the more of an exponential impact it's going to have in the future, right? So that's the concern. That's the concern, and that's what we want to be keeping an eye out for. Kevin, I've got to run, man. Unfortunately, you know, I've got just with all the volatility going on, I've got a team meeting, so I've got to get to that with a couple of my traders for the business. But it's been awesome hanging out. I know we're storing things locally, so I'll just keep the browser open, right?
Yes, sir. Yes, sir. Okay. What? You're leaving us before New York session open?
Sorry, boys. Sorry.
Breaking my heart, man. No, thank you so much for being here, bro. Absolutely killer episode with you. Guys, be sure to keep watching. We will keep the stream going another hour and 15. Imre, again, thank you so much. Guys, run that like button up for Imre. He joins us here on Market in the Morning every Wednesday.
All right. No worries, guys. Thanks for having me. Thank you, Kevin. Have a great trading session, guys. Stay safe out there. Volatility is still very, very elevated.
That's absolutely 100%. Thank you, Emre. Have a great day. Be well, man. Trade safe. Awesome, guys. Great. So let's cover a few of those headlines that I mentioned that came out yesterday. Now, this is one that came out just 10 hours ago, right? This is 11 o'clock last night. U.S. struck nearly 20 targets in Iran, U.S. officials say, right? So we could scroll through this and see that there was clearly an escalation going on overnight. There was also, let's see, Iran launches drone ballistic missiles attacks at U.S. bases. So again, things are starting to pick up. These are headlines that don't usually come in times of ceasefire. So the fact that we've gotten 5 billion headlines saying, oh, we're coming up with a peace deal, we have peace talks, that we're finalizing it. I'm sure you guys remember last week, we were laughing at the fact that we had like 4 headlines throughout the week, all saying we're finalizing a deal. It's getting close. It'll be done within a few days. Here we are a week later. We've been telling you here on Market, it's not happening. Wars don't just start and stop within 3 months. It's going to be dragged out. These headlines are just noise. Not every headline you read is factual and true. As much as they want to say we have headlines coming out of peace, things are starting to slow down. It's not always true. We cannot take everything for what the face value says. If you believe every headline that comes out about the Iran war, you would have thought it was ending in the beginning of April. That's almost 3 months ago now. So this war has been going on. Things have been starting to pick up again more recently. And we could take a look at oil and see how oil has been responding to these headlines. Oil is a huge catalyst to keep an eye on, to have a bit of an idea of where the big institutions are positioned and how they're anticipating this war to either continue or to start to halt. So taking a look at oil here, we see that we're still dead within our range. Yes, sir. Welcome. You already know it, brother. You already know. So let's see. We have some support down here, just like we've been going over. We have $80 as our support zone. We have 104 as our resistance. And we've really been trading within this defined range right over here. Look at this, guys. Every time oil is trading within this area, it finds resistance, sells off. Finds support, continues. Resistance, support. Very little lack of follow through. Kevin, let's hear your story. How did you get into trading and how did you get part of the capital hungry market team? Hey, I appreciate that, man. So I got into trading like at the very beginning of COVID. It was like March 2020. My story, it's a bit different from others. So I got very sick, needed a whole bunch of surgeries. Surgeries didn't go well, unfortunately. Put me out of what I was originally doing work-wise. And I was devastated. I wasn't doing well. Things weren't looking good. But I always had a strong, hardworking personality around me, right? I always did extra. I always stuck my head out for everybody else. And I always feel like that's the right thing to do. Treat others how you want to be treated. My camera decided to cut out, which does make a lot of sense as it's been flickering. Hopefully it does come back. But yeah, a little about me. Got sick. That's what got me into trading. I saw so many ads online about, oh, you can make this much money with options trading. You know, everybody was selling something. And I was like, all right, well, I have to try this. I'm home. I just went from working 50 hours to working nothing. I got to do something. I have to support myself. I have to support my family. I have to do what's right. And that's exactly what I did. Options. I just spent hours and hours and hours, book after book. Every book you could think of trading-wise, I went over. Mark Douglas, Trading in the Zone. The Volume Analysis by, I forget her name, but really great book there. Went through YouTube Academy, just like I'm sure all of you have as well, right? YouTube Academy, you go through YouTube video after YouTube video after YouTube video, you find yourself spinning your wheels. Fast forward a few years, ended up finding myself a mentor, gave me some proper guidance, was able to really dial in on support, resistance, mainly though supply and demand, and volume analysis, which is like volume profile and order flow, things of that nature. That really helped me find some strong foundation in trading. Since then, I found a lot of interest in fundamentals, what's really driving markets. First, it was really covering things like earnings, right? I was a host on Benzinga. I'm sure you guys have heard of that, where I covered things like NVIDIA earnings, futures contracts, same things I cover here, right? I want to bring that knowledge on to the next person because I know when I was starting as a trader, I would have wanted that as well, right? I would have wanted that forward guidance. I would have wanted that extra hand. Trading is a fantastic industry to get into. I absolutely am in love with it. I'm never going to leave it. But I also want to be able to give that to the next person. It's so hard to get into trading by yourself. You're going to get frustrated and you're most likely going to feel like giving up. And the only time you fail in trading is when you quit. That's why you can never, ever quit in trading because you have to have that consistency. Yo, Nil, whatever you want, man. If you do end up wanting to come back in, you let me know. Appreciate you, bro. But yeah, guys, I had the idea. I was like, all right, let me get into trading. I loved it. Futures is where I found more success versus options. And yeah, it's just rest is history, man. Rest is history. That was about 6-7 years ago by now. And yeah, I love where I'm at. Love doing this with you guys here at Market in the Morning. Really great channel, great trade setups. It is 9:18, so New York session opens very shortly. Let's run down some levels again and some key areas, but that's just a little about me. Now, somebody in the comments asked, so figured I would answer. Yeah, VIX, take a look at the VIX, very smart, right? So let's take a look at the ES. Let's find some key levels on the S&P 500. Then I'm going to give you guys a little bit of insight on the VIX as well and how we could use that today to gain traction on our trades. So the S&P 500 is what we'll look at first, and we'll even take our volume profile down for a moment. But the first thing we're going to do, like we always do, is open up market. Where is market giving us and what is market giving us in a sense of day trading bias? So we're still slightly bearish. Our swing trading went from bullish to now slightly bullish as it starts to demote itself because of the selling pressure, right? And now this all didn't just start out of nowhere. We know where this started. This started from non-farm payroll. And if you're new here, let's say you didn't know what happened last week, what's great with market is you could click a candle and it's going to break down exactly what moved markets that day. Yes, sir, absolutely. That's it, Dina. That's it. Every challenge is just another opportunity. Everything is all about perspective, how you change things and how you break things down. Absolutely, guys. My pleasure. And you guys can follow me on Instagram too, is at Trading with Kev. I do try to post content every couple days. I used to be daily, but every few days I will post something for you guys to give you some insight and clarity in the markets. I saw a high impact headline before about SpaceX IPO, and we could touch on that as well before we get into some levels on ES and NQ. So SpaceX IPO draws billions in orders from Middle East wealth funds. Now, SpaceX's IPO is expected to come out at a $1.75 trillion market cap. That's nearly $2 trillion in market cap. To put that in perspective, Amazon, we all know Amazon, took 3 decades, 30 years to hit $2.8 trillion in market cap. SpaceX wants to come out day one at almost $1.8 trillion market cap is mind-blowing in my opinion, extremely overvalued. It had not proven itself yet in the market. It hasn't proven itself yet in consistent revenue. So there's really, in my opinion, I'm staying away from SpaceX. I think SpaceX is going to do just what Meta did. And Meta did in I believe it was 2012. And we'll pull that up right now. When Meta IPO'd in 2012, it sold off 70%. So here we go. This is Meta IPO. It went from highs to lows. Look at that 60% decline in its first few weeks, in its first few months of trading. Meta, Facebook at the time, oh my God, we got to buy it. It IPO'd. I have to buy it. Retail all knows about it. That's something to always keep an eye on too. How strong does the public and how much does everybody know about it? SpaceX is an extremely publicly known company, and the IPO has been anticipated for a long time now. So when things like that happen, it's almost like a buy the rumor, sell the news situation. If we know that a lot of retail isn't too interested in stocks unless some type of big IPO comes out, then guess what's going to happen when that company IPOs? It's most likely going to result in a lot of those people who were already early investors. You guys know the term, early investors. They're going to sell. That's their selling opportunity, is when the company IPOs and they could sell all of their shares for decent profit, driving the stock lower. But that's when we're going to look at SpaceX for a buying opportunity. Once it dips that 50% off. Bro, I'm not saying to short SPX. I'm just saying I'm not going to be touching it. I wouldn't touch it with a 10-foot pole with the hype around it. It's not worth it in my opinion, especially seeing things like Meta in the past, how those have reacted. And just really the SpaceX IPO, estimating it at a valuation of 1.7 trillion is wild. Anthropic is another one that's expected to IPO soon, but even that valuation is 900 billion, right? Not even breaching that 1 trillion mark. I think that's a lot more reasonable. Doesn't mean I'm going to buy Anthropic when it IPOs. Absolutely not. Possibly we dip on that as well, but I don't think we're going to dip on Anthropic as much as we're going to see a dip on SpaceX. I believe SpaceX has the ability to dip 50% when it IPOs if it comes out at that 1.75 trillion market cap. If it does, it brings it down to 800 billion, 900 billion market cap. That's a buying opportunity, in my opinion, not financial advice. Knock on wood. Take with it what you will. Always do your own research. I cannot stress it enough, guys. Join these shows, have fun, engage, learn, but always do your own research. These shows are here to help give you guys some proper guidance, give you some insights that maybe you wouldn't have thought of yourself. And that's why we do it, man. It's why we love to do it. Absolutely. Now, I want to show you guys on the ES yesterday. Now, I'm sure you guys, if you've been here for the past few episodes, past week, I love to preach about looking at the percentages when we're looking at ES and NQ, right? Now, I don't just mean, oh, what percentage are we up today? I mean like major pullback levels, 5% from all-time highs, 10% from all-time highs. We mapped this out the other day, our 5% from all-time high, which is, look at this, guys, right here, 5%, brought it to 72.50. And would you look at the level that price reacted to yesterday? To a tick. Look at this, guys, 5%, we had a reaction. That is a major level that institutions are positioned for a reaction, whether they're exiting short positions or beginning a longer-term buy and hold opportunity. These percent levels are key. Guys, make sure you run that like button up. Absolutely. We could take a look. We mentioned the VIX before. See where we're at on the VIX. Now, ES, because we don't really have much support and resistance, the first spot I would want to see shorts on ES is 74.58 all the way up here. The next area I would consider looking for a short opportunity is if we could sweep this recent pivot high. We see this is a lonesome high level. We always have to think of trading from both perspectives. If I was long, where would my stop loss be? If I was short, where would my stop loss be? Well, any trader that has been shorting the overnight session most likely has their stop loss either at their recent high or at that standalone high. Now, a standalone just sort of means that's the most recent lower high that we created. So listen, if this is where a majority of traders have their stop loss, wouldn't it make sense, and I'm sure everybody here has gone through this before, where you take a trade just for markets to stop you out and go in your favor? Well, guess what? I want to position myself where instead of getting stopped out and then markets move in my favor, markets stop out everybody else and then move back in the right direction of the general trend, which is now, yes, shifting back to a more bearish stance. I think a lot of retail who's unaware of fundamentals thinks that, wow, CPI gave us a bullish response. They're going to go long off of that. Unaware to them that no way, CPI was extremely bearish still. Yes, it still came within the range. We can take a look at CPI, economic calendar, and we see CPI, 4.2% was our forecast, bank forecast. Minimum was 4.1%, maximum was 4.3%. So we're at least not expecting a huge 200-point move on the ES like we had yesterday and on Friday. However, I'm still not expecting markets to just flip bullish because CPI came within range. It's still higher than the previous Yo, we run these live sessions every day, bro. You guys join us every day as long as you keep running that like button up here on YouTube. And if you are here on Twitter, please be sure to hit the repost button. You could even quote it and say, join this show every day. We're very happy to do this, so we definitely encourage some extra engagement and have you guys like it and share it with your friends. I think New York, what do you think? And welcome. I think New York session open, we get a deeper pullback in gold, create a range, so we get it on forecast data. I will look for 4130s low and 4230, 4240. Nice. Yes, sir. We go live 8:20 a.m. So we're 10 minutes before any economic data comes out in case anything is to be released that day to 10:30 a.m. So we run it for over 2 hours, give you guys some clean market insights, some trade setups, and then we also take the New York session open too, where we do take some active trades. Usually it's me and Nolab, me and Jeev, me and Imre. We're covering markets, giving you guys the best of the best. Now, to cover gold, because I know there's tons of gold traders here, and I absolutely love to see it. Gold is definitely my go-to when S&P and NASDAQ are more within a range and less giving us a move. So the area I would look for on GC, which is gold futures, is between 42.28 and 42.46. And if we take a look at our market terminal, GC gold, we're going to look at GC futures. Our pullback level is 42.30. That's exactly within my supply area that I'd look for price to reject. The reason I like this area, and this is the same on GC and XAU USD, is because if we reject this zone, we do not break this recent high. What's price doing? Price is creating a lower high. So we see that price created a lower high, lower low, lower high, lower low. Now we want to see price pull back again, create a lower high. If we respect this recent lower high, guess what's going to happen? We can look for price to consolidate, reject, and make its way to continue trend. Trend is our friend. Lower lows are the next target. If we could find a good selling opportunity on gold. On XAU USD, I have both of them pulled up right here so you guys can look at the levels side by side. I'd be looking for 42.05 to 42.20. Again, same analysis behind it. Lower highs, lower lows. So 42.06 on XAU USD, 42.30 on GC futures. If you guys want to see any specific tickers, definitely let us know. New York session opens in about 15 seconds, so we'll see how markets want to react. Yesterday, NASDAQ gave us a beautiful short entry, swept a previous day high into this resistance point, and just sold off, and that's all she wrote. At this point, I'd almost be expecting similar price action to Monday, where we had a 1,500 point drop on Friday. Monday was a pullback. 1,500 point drop on Tuesday. Wednesday might be a bit more range bound. We know that inflation came in higher than previous, but we also know it still came in within that range. So something I'd be interested in looking at our volume profile is a rejection off of the sweep of this recent high. Just like we mentioned before on ES, a lot of short sellers who are short in the overnight have their stop losses at recent highs, whether it's this one from yesterday, 4 p.m. Eastern, or it's this one over here from 8:15 overnight. Both of them are very relatively close to each other. This is the spot I'm looking for shorts on NQ. So there we go, guys. We got some setups on NASDAQ. We have some setups on gold. And what's cool, too, is we could add alerts so that if we're looking at ES or NASDAQ, and gold does move to the level we're waiting for, we're going to get notified. We'll be able to take trades at that point. So I'm staying patient. This is NASDAQ. We could take a quick look at the VIX. VIX is another key asset to take a look at when it comes to trading S&P and NASDAQ. Now, VIX being above $20 signals one major thing, and that is uncertainty and extra volatility in the stock market. So again, I'm only interested in shorts, but I'd much rather wait for a pullback. I'm not forcing any trades. We're not going to jump the gun. Markets just opened a minute and a half ago. I'm not just going to jump in a short position because it looks like sellers are stepping in because we're smarter than that, but we're also going to give markets the opportunity. We see that we wicked into this area, the 73.46, multiple times now. So why would I want to short these recent lows? These are recent lows right here, because this is where price has been respecting. since 8:30 when we had CPI. So guess what? Next trade setup I might look for is if we could head back towards the CPI low, and we'll call that our data low. Here's 8:30, and we could call it data low. And we also have now, we're going to copy and paste that, and we're going to drag this to the top. And what's cool, guys, if you're using the the trend line tool on TradingView, when you're lining it up, you could hold the shift button and it will make it straight for you, so you don't have to try to line it up exactly yourself. So data low, data high, this is the range area that we now have on the S&P 500. Same idea. We hold VWAP here, we hold this wick area, maybe we breach data high and then reverse back to the downside. Regardless, I'm looking for short setups. I'm not forcing any trades. We're being patient, and we're also keeping an eye on that VIX. What I'm going to do too on the VIX here is we're going to mark out some key zones. Now, there's no supply or demand when it comes to something like the VIX because VIX has no volume. There's no volume being traded on the VIX. There are options, but there's no volume being traded. So what we like to do, and because VIX also doesn't make all-time highs religiously, is we mark out key levels. Areas in the past that held up as resistance, held up as support. We see that this area right here around our $20 mark was a resistance in the past, support when we're above it, support when we're above it, support when we're above it. So if we remain above it, let's say we do move back into it, and then we start to reject, I would look for the S&P to also be moving into an area for price to reject to the downside because they should be inverse from each other. NASDAQ also taking a bit of a dump here. As you guys know, I'm also a huge fan of taking a look at equities. Let's take a look and see what our equities are doing. Right now, we're on the daily time frame. Look at this top right chart. I'm going to full screen it. This is Apple. Apple, coming off of all-time highs at 317, is now down 8% in a matter of 2 days. That's a major pullback. That is strong selling pressure. That's not just selling pressure, but this starts to become panic selling. And we see that because volume is also starting to pick up here. So I would definitely be keeping an eye on things like Apple to give us a bit of an insight into the overall trend on ES and NQ2. We also see Microsoft had a big sell-off as well, down 14% from its recent high. Meta also trying to break this recent range we had to the downside. So for the most part, we see that equities in correlation with each other are giving us stronger moves to the downside. In my opinion, and this is just from going over these market in the morning episodes with you guys, markets are really starting to price in worse economic data and just a worse economy, right? So I'd really want to start to see that pullback, that selling pressure really kick in and stay valid. Right now, NASDAQ, in my opinion, this is a no trade zone. If I'm not near my level to short, and I'm not near my level to possibly take a scalp long, then we're not taking any trades. I talked about it yesterday in yesterday's Market in the Morning episode. Give yourself 10 minutes in the morning or 10 minutes before whenever you trade to go over the charts on a higher time frame. Give yourself the opportunity to say, okay, how is the daily time frame? Is there weakness? Is there strength? Where is there a possibility for us to pull back or continue? And also, what have markets been doing recently? And guess what? When you're doing this morning routine, you bring market on the table and you say, okay, great. Now, does my market analysis also line up with this time frame and with these zones I'm looking for? Look at this. 73.85 on ES for a pullback zone on market. 73.80, right? 73.85, is that it? 73.85. So 73.85, let's take a quick look at ES here. 73.85, right up in here, right in that area that we were looking for price to react to. So same story, looking for shorts at the highs. We are not looking for shorts while we're trying to break lower. And look at that. If you were, guess what would have happened? Markets would have popped up on you a quick 20 points. That's how big these candles are on ES. And NASDAQ, we're looking at a 156-point candle right there. These are sizing down conditions and wait for your level conditions. 100%, guys. Do not force anything today. Let's take a look at gold. Gold, wonderful, is holding that key level, 41.64, looking for this temporary pullback on gold towards 42.28 and 42.10 on XAU USD. Guys, let me know what you're looking for, what you're looking at today on futures, on Forex. What tickers do you guys trade? We can cover it here with market, give you guys a proper breakdown with the fundamentals and what's really moving that market today. It is so important that you don't just jump on a chart, look at some candles and go, oh yeah, that's happening. Because guess what? If you did that with ES today and you were so zoomed in, you'd be looking at this and you'd go, oh, wow, yeah, if we break this high right here, we're definitely going to continue higher. No, sir. When in doubt, zoom out. That doesn't just mean to make your chart smaller. It also means to look at a higher time frame. When we look at a higher time frame, think of it this way. 15-minute time frame we're looking at, right? Well, guess what? It takes 4 15-minute candles to equal 1 hourly candle. Well, instead of zooming out of my chart here to fit more on my screen, I could just go to the hourly. Now I could fit 4 times that, and I'm getting a stronger read on the market, right? Look at this supply zone on ES here from yesterday, 74.56. I would love nothing more than this market. There we go, just took out data highs to push 93 points to the upside on ES here. Trap a lot of people. Think of it this way, guys, from a retail perspective. If you had no idea about fundamentals, no idea about the jobs data, the CPI data, and you just saw markets pumping, wow, we moved 90 points. On any random day, a 90-point move on ES is unheard of. That's great. That's such a big move right here. But guess what? That move ain't blank. That move ain't crap compared to the move we had yesterday of 220 plus points. So guess what? 90 points, believe it or not, that's still considered a pullback. That's a pullback in these market conditions. Take advantage of the trend. Take advantage of the volatility. And we also know, I know Imre was going over the volatility with the ADR. Guess what? We also read volatility with the VIX too. Now, VIX did just take a huge dump right here from 21 to 2048. Let's take a quick look at the VIX and see if we find any key levels on the hourly time frame, right? Where was there support or resistance? Well, we do see that this area around 20 was super key. Look at this. Support, it was support on this day. It tried to act as support on this day. We failed it. It was resistance right here. It was support right here. Support, support, support. Now, I would like to see VIX come back to this $20 level, key psych level, and I'd like to see ES move towards 74.56, or like we mentioned, even if we could sweep this recent high around 7,400, that's a great level, 7,400 even. Key psychological point that no matter your trading strategy, opening range breakout, initial balance, previous day high and low sweep, Fibonacci, you're looking at key psych levels, those whole numbers. Yeah, you want to see some levels on NQ? I got you, bro. Absolutely, man. What's up, Jaleel? How are you doing, bro? Hope you're doing well, man. Happy Wednesday. What a great day to trade. What a great day to go over markets. Let's take a quick look at our hourly here on NASDAQ. NASDAQ did not create that resistance up here, but it does still have this one that is still valid, but that's all the way at 29,776. That move right there alone on NASDAQ would call for us to pull back 800 points. Now, when it comes to trading, we don't want to just find our levels, find a trade setup, and just go with it. We want to ask ourselves too, is this a realistic trade? Is this a realistic setup? If we really were to pull back over 800 points on the NASDAQ, is that really something that we would try to short at that point? Or is that something that hopefully on that 800 point pullback, we were taking some long positions to scalp it back higher? So in my opinion, the more realistic move would be a sweep of this recent high we had. We have, for any fair value gap traders, we do have an area of fair value right here. So this would be ideal. We could pull our volume profile. So I like to place my volume profile at the futures market open, which is 6 p.m. Eastern, right? That's our daily volume profile. Well, let's drag it back to the previous day and see what was going on in this area. And this area, look at this. We have, like Imre likes to mention, those low volume nodes right here and right over here. And look at where this one lines up. This one lines up right with the sweep of that high. So again, ideally, I'm really looking to see if markets can come sweep this high and reverse back lower. If we sweep these highs, I know a lot of traders who don't have strong analysis or good opinions. They're just looking for breakouts. They take this breakout trade, 29,200, another key psych level, and then price reverses on them. That is not what we're looking to do. We do not want to buy highs and sell lows. We want to sell highs and buy lows. Yes, Anna Cooling. That's it, man. That's it. Just popped into my head from a little birdie just reminded me of the name of the book. Circling back to when you guys asked me about my story, the books I was reading and everything I was going over. Volume Analysis by Anna Cooling. That is a great book. 10 out of 10 we recommend. Very cool. Great insights. Let's take a look at our market and see if we have anything going on here. So breaking news, any big headlines, and I also want to turn on our high impact alert. Guys, if you're using market, which I 1,000,000,000% recommend every trader have market in their arsenal. If you don't, you're really putting yourself at a disadvantage, because to have this at your fingertips is a major advantage. It gives you that insight. It gives you follow through. It gives you the live news headlines the second they come out. We've seen so many instances here on Market in the Morning where we get a headline and 20 seconds later, markets are reacting. Markets are off the chart. Market gives you those headlines that markets actually react to. A name of indicator that you use for volume profile. So it's not an indicator. It's actually a tool on TradingView. It is the anchored volume profile tool. So anchored volume profile, how you use it is you click it. And then once you click it over here, you click to set a point. So you come to the 6 p.m. Eastern. I like to keep it on the 15-minute or hourly, 6 p.m. Eastern. You click it right there, and it gives you all of the information going forward. So it gives you all of, let's see. It gives you all of this information over here in volume, right? So look at that. Boom, another spike up. NASDAQ had a nice pop there. See if any headlines came out. We did hear something. Iranian missile hit. Gold trims losses on softer than expected U.S. inflation data. Nothing major. Nothing to tell me, yeah, we're going to be bullish now. So I'm still waiting for that pullback. And that wasn't a little birdie, by the way. Shout out to my homie Doc Ock over here. Great dude. Just he reminded me in the chat that the book was by Anna Cooling. Now let's see. GC. Look at this, guys. GC pulling back. Now listen, if you have a trade setup, you have a trade plan, you're able to take some longs. You see a long position here. Sure, go for it. We have our upside target. In my opinion, though, and I'm sure Imran and the lab would preach it as well, if we're waiting for a pullback and we know we're more in a bearish market, why would you go long against the trend? There's no point in risking your capital to fight the trend before we even get to the trade setup that you've been looking for. Another headline right there. See if anything came out. Nope, nothing major. Nothing major. And what's cool too, right? We could look at market here on our trading view on our web-based. And when we're looking at web-based trading view, we have our headlines right over here. We can make it smaller so it takes up less of the screen. Perfect, man. This is so cool, guys. Make sure I'm going to drop the link again for you guys so you guys can also download the Market AI TradingView integration. That's going to be right in the comments over here. I'm going to paste it right now. You guys click that link, check it out, download it, sign into your market account. Extremely easy setup process. Extremely easy. And what's cool too right now is it offers two things. It offers our breaking news, which is beyond important. We need that to know what's actually moving markets, and our calendar, which again is an extremely important aspect. S&P and NASDAQ continuing this grind higher. 15-minute time frame was very bullish off the open. Really not looking for shorts right now. Just waiting for markets to come back to the levels that we are looking for. We are hearing some headlines. If higher energy prices start leading to generalized inflation, there may be a need for consecutive rate increases. Guys, again, if you're a recurring viewer of Market in the Morning, you know that I've been talking about higher energy prices. Higher energy prices leads to big tech companies to spend more money. It leads to AI companies to spend more money. More money being spent by big companies means higher prices for the consumer because they don't want to front that bill. They want to make the consumers pay that price, just like we saw last year with the tariffs. So if higher energy prices, if you don't know, if you see a headline that sounds important, but you just can't quite understand it, that's fine. There's no need to copy and paste it and Google it. You hit the brain icon over here, it gives you a market analysis. Macklum's comments suggest a willingness by the Bank of Canada to hike rates consecutively if energy-driven inflation broadens, tightening policy expectations. This is modestly supportive for CAD and Canadian yields, but negative for rate-sensitive Canadian equities and housing. Higher real rate expectations and policy uncertainty are mildly negative for gold, with broader global assets reacting mainly via risk sentiment and inflation expectation channels. Now listen, this is Canada, right? So you might think, oh, well, this is just Canada. That has nothing to do with us. It's global. Energy is global, guys. If one country is starting to feel that pain, that could give us some insight too into, okay, are we next? Are we going to see that as well? So very important. Keep an eye on those headlines, especially that breaking news tab. Here we are, ES continuing higher. Like I mentioned before, if you're looking for scalps, maybe you want to try to take it to the upside. We do have increased volume here. It does look okay. This is not a trade that I'm going to take myself. I'd much rather be patient, wait to see if that short setup wants to set up. And guess what, guys? If we blow through this price level over here, when I say blow through, I don't mean like, oh, we break it and we chop around it by like 4 or 5 points. No. I mean, we blow through it like it's not even there. If that's the case, then sure, I'll change. We'll jump bias on a short term and look for a possible reaction to this level. But then guess what? I'd be looking for a break and retest. We always want to see a break and retest if we're ever taking trades, especially counter trend trades. Break and retests are always the way to go. All right. Awesome, guys. All right. So let's see. That is continuing higher here on ES. You can take a look. We're getting pretty close to that 7,400. I'm sure NASDAQ is also. Yup, there it is, guys. Continuing up. Oh, no, that's gold. Let's get NQ in here. But gold also, like we said, continuing higher. If you have a buying opportunity, you see a buy setup occurring, I'm looking for price to move higher at this point. Does it mean I think markets are going to flip bullish? Absolutely not. Does it mean right now, short term, we can see a bull move? Absolutely. Guys, we're day traders. We're trading on such a small scale. We're trading on a 5-minute chart, a 15-minute chart. There is no reason to be jumping the gun. There's no reason to be counter trend trading and holding for too long. Look at this market headline. NASDAQ turns positive. This is such a cool update, man. This is so cool. So NASDAQ continuing up. Again, good momentum behind us. We're at our value area high right now. I wouldn't look to buy these highs anymore. Last buy entry possibly would have been this recent 5-minute candle. I'm still not looking for it. I don't want to counter trend at the higher time frame. If you're a trader and you're zoomed in here on the 5-minute, you might look at this and go, wow, we're so bullish. I gotta buy this right now. Meanwhile, all you had to do was look at a 30-minute. And you would have seen yesterday's major sell-off and known, okay, we have a pivot high right here. We might actually reject that. So be patient. Let me know what you guys are trading in the comments. Make sure you smash that like button all the way through. Killer episode so far today of Market in the Morning, guys. And again, we do this every single day for you guys, man. So definitely show some love, like, and of course, follow on social media. The Instagram for Market AI is Market. What is it? It's Market. It was Market_AI, but that page has unfortunately gotten taken down. We're working on getting it back, but follow us on Instagram is marketai.insights. So definitely go follow that. I got a NYSE session open pullback short-term buys, 200 pips and scalps as we got on forecast data. Dude, good job, bro. Good job. Absolutely. Market Insights. Yes, sir. MarketAI.insights. That is the Market AI new YouTube channel. New Instagram channel. So go like and follow on that. Awesome, guys. Awesome. Look at this pullback. This is why I'm not jumping in longs, right? Imagine you jumped in longs up here just for ES to pull back. Oh, still pulling back 20 points against you. Same with NASDAQ. Let's see where NASDAQ is. You jump in longs at the highs. 130 points. We're getting 100+ point candles on NQ. If you're trading the NASDAQ, you're trading micros. If you're trading Forex, you're trading, I believe, what is it? It's like US 100 or something like that. You're sizing down. Everything's about sizing down right now. Now, we have marked out on ES our data, our data high. This is our data high and our data low. I want to see price trade back within that range of data high and low. We close back within range. I'm looking for a short position to then target that data low, right? When we come within range, more times than not, it gives us range-bound price action. So take advantage of that information. Say, okay, great. That's what I'm looking for. It is 9:52 right now. Always make sure to check your other time frames, 15-minute, 30-minute, whatever it might be. 30-minute candle closes in about 7 minutes. If you haven't taken a trade, sit on your hands. Nobody has a gun to your head saying you have to take a trade right now. This is why we come up with pre-market plans. We do our pre-market analysis. So when we're not trading at either of our predetermined levels or zones, we're staying out of it. Something I might look for too. So you guys know how I was looking for the sweep here of ES, sweep it, and then reverse back lower? Well, guess what? If the 15-minute and 30-minute time frame want to give us a bearish reaction, then I would really be seeing that sweep area as our stop loss area, because that would be where our lower high is. Lower high, but unfortunately, with this lower high that formed, we did not make a lower low. We ended up making a higher low. So that puts us more in a confined range. So again, matter of being patient and really waiting for possibly that 30-minute candle to close, as it has 6 minutes to do so. The hourly also closes in 6 minutes. And if you're trading futures, the 4-hour closes in 6 minutes as well. Now, if you're trading XAU USD, the 4-hour closed at 9 a.m. If you're trading GC futures, the 4-hour closes at 10 a.m. The reason for that is because Forex is open 24 hours a day. Futures are only open 23 hours a day. So there's that hour difference from 5 p.m. Eastern to 6 p.m. Eastern. Guys, great insights, great info today. Still waiting for a possible short setup on gold. It is chopping its way higher. We're not chasing this for longs. We're just waiting to see how markets want to react. If you guys want to go over any specific tickers or any headlines, please let me know. Could run into market and see if there was anything else valid. If US improves significant new trade restrictions, we may need to cut rates. So look at that. There's a little bit of a back and forth between Canada headlines. So USD/CAD, if you're trading that today, I'd most likely sit on your hands. Not something that I'd really want to jump into with strong confidence. Old me would have taken a sell around 41.74 on gold. 41.74. Okay. Oh, I see right up over here. 41.74. Got you. Now I'm waiting for a great pullback area. That's it, man. That's what we like to teach you guys here on Market in the Morning, is not only the fundamentals, not only the drivers of markets, but how to trade correctly and how to really trade with proper risk management versus just jumping on in. Let's see. Let's take a look at our, so flip watch on ES right now is S&P 500 futures fall, NASDAQ futures off as U.S. military resumes strikes on Iran. Let's take a look at our economic calendar. Now, today was CPI, right? CPI came in within expectations, 4.2%. In my opinion, it's still more of a bearish situation as CPI has been flying higher. It was at 2.4% in March. Then it was 3.3, 3.8, 4.2. CPI inflation is flying higher right now. There is nothing of this historical data chart to suggest we're going to start dumping, right? So watching those charts, understanding our trading charts, that all falls in line. Everything comes back together. So inflation, I would want to see that continue higher. Tomorrow, we have PPI. Now, PPI is sort of that forward-looking on inflation. And PPI, same thing. It has been flying. Last month, forecast was 4.9 on PPI. It came out at 6. That is a massive, massive beat. And what's cool too with market is you could check your impact on, and you could change this to whatever asset you trade. ES, okay, if ES comes in higher than the range, which the expected range is 6.4, if it comes at 6.5 and higher, that's stronger bearish on ES. If we get that tomorrow, we can expect some type of extreme move to the downside. Take a look, guys. Take a look back at ES and NQ. See that, sellers? This is why we didn't just take a random short. We know that we didn't hit our area yet. Patience is key. Patience is a virtue. Just be patient, guys. No reason to jump the gun. Gold didn't hit the area yet. Listen, I love to teach, I love to educate, and I love to give you guys some insight, right? Markets are all about patience and opportunities. I love what Nalab said the other day. He mentioned something about, we didn't just wait a few minutes for this trade setup. We've been waiting and learning for years about this. So if a trade setup occurs in the first 5-10 minutes of New York session open, great, fantastic. We could be done for the day by 10 a.m. Eastern. But let's say markets open, they're not near our levels, and we have to wait for those levels. Then guess what? We're patient. We're letting markets play out. Markets could give us an opportunity at 9:30. Markets could give us an opportunity at 10:30. Give yourself a window, a dedicated window to trade that you could be consistent with every day. Let's say you come into the shows at market in the morning. So you join 8:20 and you trade till, let's say, 11 o'clock. You're giving yourself almost 3 hours of a window to say, I'm doing my analysis in the morning, and then I'm taking the trade setups when they occur in my window. If you want to sit in front of a chart all day, you can do that too. In my opinion, the longer you're sitting in front of a chart, the harder it is for traders who haven't found that consistency to stay out of trades. The longer you look at a chart, the more you feel that anticipation that I have to take a trade now, whereas that's not always the case. You want to be able to be patient and wait for your opportunity. If you take a great trade at 9:45 and you're out by 10 o'clock and your window is till 11, but you hit your daily goal, why are you watching the charts still? There's no reason to keep watching the charts at that point. Go enjoy your day. All right, ES is rejecting. I love to see that. NASDAQ also running into a bit of a wall here. Let's take a quick stab at our equities one more time and see how are they doing. Are they trending? Are they ranging? Microsoft trying to move higher. NVIDIA is really our leader. NVIDIA is trying to move lower. I can't believe NVIDIA tried to crack below 2. It did crack below 200 temporarily yesterday. So a lot of selling pressure on NVIDIA. Amazon new low of day. Apple rejecting. Meta rejecting. It's just Google and Microsoft that are trying to hold bullish right now. But that's, in my opinion, not enough. And I'd actually start to consider some shorts soon here on ES or NASDAQ. If anything, I'd be a bit more interested in NASDAQ shorts near this level. I'll let you guys know if I do take any trades myself, but I do just want to be a little patient and see some follow through first. Let's see. Like, this doesn't look bad. If we start breaking lower, might look for a short stop near the highs and just trade it back within that range. If you want to be a bit more patient, you could look for us to break back below that data high and put your stop loss at this current 5-minute high up here and say, okay, I'm taking it short on the break lower, targeting data low, right? Be patient. So here we are getting some selling pressure, and we're much better off looking for the shorts today versus the longs, knowing the strength and the moves we've been seeing in the market. VIX. See what VIX is doing. VIX is trying to move back higher as well, which again is more of a bearish intent on the markets. There we go. NASDAQ getting weak. We knew equities were very weak. Just be patient. Just be patient. Look at our equities one more time. Microsoft trying to breach new high of day. NVIDIA was trying to make new low of day, but it's trying to struggle. Google rejecting. That's great. Just a lot of 50-50 in our equities. So I'd be a bit more patient, still leaning on more of a bearish bias on ES and NQ. I'm just not taking any trades here myself. Like I mentioned before, though, if you see a trade setup, if this is your trade setup, take it. These shows are here to help give you some proper guidance, give you some golden nuggets, great trading tips, and great market insights that you might not think of yourself. That's why we have these shows, and to, of course, show you guys the benefits of trading with a fundamental terminal like market. Let's see. Any other economic data today? Today is Wednesday. We had 8:30 CPI. We do have weekly crude exports at 10:30. That's something to be aware of, really only if you're trading oil itself. Other than that, we have Thursday, which is tomorrow, PPI. Now, PPI and initial jobless claims, both at 8:30 initial jobless claims. If you guys are recurring viewers, you know that this comes out every Thursday. That is not the make or break. PPI tomorrow will be our stronger economic data insights. And tomorrow we will have GVON. So very exciting there, guys. Make sure you run the like button up if you've been enjoying today's episode. Now, we've been going since 8:20. Absolutely phenomenal. We had Imre on. We had Nalab on. Great guys, great traders, and just great hosts, and just great people in general, right? And that's what we want to surround ourselves with. We want to surround ourselves with people that are like-minded and in positions that we want to be in, right? Surround yourself with success if you want to be successful, period. Look at this, guys. I mentioned I'm not taking it short here. I'm not convinced. I'm not convinced that sellers are stepping in at this point. And what happened? Sellers failed to step in. So I said, be careful. If you have a setup, go for it. I'm being extra careful. I know that we were range bound on the CPI data. I know that there is a ton of short covering that has to happen from yesterday. So not for nothing, guys, but we might end up getting, here we have a pullback area right here on the hourly. We might end up getting a pullback all the way to that 74.56 level. Again, making us a bit more bullish right now on this intraday move, but that doesn't mean we stay bullish on our bias. We're waiting for a short opportunity. Like I said, though, day trading bias-wise, you can take it for a short move to the upside. I would just be very careful, and if you are taking any longs, I'd really be looking to scalp. I would not look for a long-term hold today. Especially given the strong moves we've had to the downside. Let's see. ES still holding data high, trying to move to that 7,400. Really good stuff there. Take a look at gold. Did gold end up coming to our supply? Not yet. Not yet. We got 42.27 on GC, and we have 42.05 on XAU USD. Yo, Cozy, I got you, bro. I read your mind, and you were about to comment gold. That's why I hopped on gold. Now, let's take a look at our market terminal for gold as well. Make sure we're not missing anything, any big headlines, what's supporting our bias, and what could flip our bias. You know, that's also one of the main reasons market is such a strong terminal, is that it doesn't just tell you what's supporting, it tells you what could flip it. So what do we see on gold? We had a pretty strong sell-off. Why did we have that sell-off? Well, let's click a candle. You tell me, market, why did we have this sell-off? And market is going to tell us. Analyzing candle data, scanning market data for time period, analyzing price action volume patterns, searching through thousands of news headlines. Bang! Let's see. GC during specific hours, effectively flat trading. This is right over here we clicked. Let's see. Reported move summary shows change and no defined open high-low closer range. China and CPI, so this was a bit more range-bound. China, CPI, and PPI data released earlier broadly in line with expectations. Escalating U.S.-Iran conflict headlines would usually support gold risk on, risk off flows, right? That's cool, guys. This is great. So I'm sure most of you know gold is a safe haven. When there's a war going on, there's uncertainty, there's selling pressure, there's a war, you know, something bad. Safe haven, think of it like uncertainty. We want to be safe. That's going to be gold. Well, we've seen the opposite of that during this Iran conflict. We've been seeing gold sell off. So market adapts to that and says would usually support gold on risk off lows. Lack of price data suggests either illiquidity, data gap, or off session inactivity. Let's click a bigger candle. Let's click one that actually had a bit more of a move. Gold sold on rising rate fears ahead of key U.S. inflation data. Precious metal headlines notes gold slipping on rate hike fears, before US CPI. Broader global market cautious with equities losing steam and dollar focus on inflation. Oil and broader commodities under pressure, signaling mild risk off and growth concerns. And move occurs in a low direct news window for gold. Positioning dominates over hard data. There we go, guys. Very good, very good. Let's see. See what's going on now. Did we miss anything? No, we didn't. Love it, love it, love it. We're not forcing trades, so we're not getting stopped out left and right. If you're a trader that's antsy, that needs to take a trade, if you're watching charts, you have to trade, look at this price action. Do you really think you would have been able to buy this dip and then get out right at the highs? No, you probably would have bought at the highs, got stopped out, tried a short, got stopped out, tried again a long, and blew your account in the matter of 15 minutes. Improper trading, poor risk management, poor trade execution. Be aware of what you're doing. Be aware of yourself. And guys, a tip that's I want to mention this. Somebody DM'd me the other day, and guys, please feel free to shoot me any messages if you have any questions or you want to cover anything. I do also offer like one-on-one sessions if anybody needs a bit of a mentor, some guidance. But somebody asked, what do I do? I'm trading on a small account, trading account $20 to $100, not much risk at play. I want to learn trading. I've done prop firms before, but I can't really seem to manage risk properly on those either. I have the bias right, but it seems that I'm either getting in too early or I'm moving my stop loss too soon. What can I do? And if you've already gone the prop firm route, you've already tried paper trading, which paper trading is okay, but it doesn't give you that same mental connection. Give yourself a week where you're watching markets and you're not taking any trades. You're watching markets, you're coming up with trade plans, you're doing everything you usually do, but you're not actually taking any trades. Instead, what you want to do, what you could do with TradingView, is you could use the mark up arrow or mark down arrow. You'd be like, okay, let's say I did want to enter a trade. I'm going to enter it right here. This is my hypothetical trade of the day. You do your stop loss, you take your screenshot. This is the trade you're looking to take. Okay, well, guess what? If it fails, you didn't lose any money. If it continues, you didn't make any money, but that's okay too, because right now your goal isn't to make money. As funny as that sounds, your goal as a newer trader is to be consistent and be confident. The only way you could be confident is if you have confidence in the strategy you're using and the trade setups you take. If you're still trying to find that confidence and taking trades at the same time, you're going to find yourself in a loop of losing trades, lacking confidence, winning some trades, cutting those winners short because you don't have confidence to hold them, and your losers end up overtaking your winners anyways. This is an ongoing loop that almost every trader ends up dealing with. And if anybody tells you they never dealt with that, they're lying to you. So give yourself that opportunity. Take a week where you're just viewing markets as somebody. Exactly. Collect data before you try to collect the money from the market. Bro, you got it. Absolutely, man. 100%, guys. 100%. Guys, we're always dropping nuggets in here, guys. If you appreciate what you do, you're liking the stream, make sure you run that like button up here on YouTube. If you're here on Twitter too, give it a nice heart, give it a nice repost. We are so happy to run these streams Monday through Friday. And next week, so let's pull up our FedWatch tool, FedWatch. Next week, 7 days, 3 hours. That is next week on Wednesday, 2 p.m. Eastern. We have our first FOMC meeting with Kevin Warsh. How great is that? And guess what, guys? We'll be hosting a special episode of Market. It'll be Market. What do we say? Aftermarket. We'll be watching Aftermarket, a special episode of Market in the Morning here on Market TV, going over FOMC. I'll have the stream pulled up. We'll have market pulled up for the headlines, and we'll see what Kevin Warsh has to say. This is an extremely important meeting for a few reasons. This is Kevin Warsh's first FOMC meeting, number one. But the main reason it's so important is because things have changed since Powell was here. We have much higher inflation. Jobs data was coming up higher than expected to. And now, guess what? The Fed by September, we have a 30% chance of a rate hike by September right here. That is the highest it's been. Just a month ago, it was at 1%. So when I say things have changed since Powell left to Kevin Warsh, things have changed within a month. That's how fast things can change and flip in the market, right? So when we see sell-offs like this, we see those 5% moves, we see big dumps. This isn't just markets pulling back sometimes, right? This is markets showing us strength, showing us a possible reversal. Look at this, guys. ES and NQ trying to continue higher here. I would not look for shorts at this price level. I would be patient, wait for markets to move higher. Like I mentioned, if you see a trade set up here, let's say you're using a volume analysis tool and you get a big buyer and you want to take it, go for it. Take a scalp higher. I'm not doing that myself. I feel like that's still counter trend trading against the higher time frame trend right now. Until we do start to get what I would possibly look for to really give me more of that, okay, buyers are still in control, I would want to see NASDAQ move above 29,600, and I would want to see ES move above 24, I would say really 74, 73, right? Because yes, this was a pullback. We are still coming off of all-time highs, but this is the strongest pullback we've seen this whole move up, right? So we always want to look for clues in the market. Well, there's a clue for us. We just had the biggest pullback we've seen in this whole entire bull rally that we've had since March 30th. On NASDAQ, it was even stronger. It was over an 8% move on the NASDAQ to the downside. Very strong move. Not something that we'd want to be like, oh yeah, I should definitely day trade this to the upside now. No way. Be patient. Let things play out. In terms of long-term investing, yeah, 8% is a great buy the dip opportunity. But right now, we're looking at it as day traders, and we're being patient and looking for a trade setup. We could take a look at the hourly. We mentioned that closed on that last 10 o'clock, and it's still, look at this. Hourly was bullish. I'd be looking for a breakout. If you use a trade strategy like the initial balance, you would be marking out the high and the low of the first hour of the New York session. So that wouldn't be 9 to 10. It would be 9:30 to 10:30. So you could only find it on a 30-minute and 15-minute time frame. We did not even form that yet. It's still only 10:13. So I'd be patient. I do think we're going to get a bit more of a bull move to the upside. I think 74.57 is in line for ES today. It's all up to you guys on finding a good entry here for a possible trade setup. Possibly if we're looking at ES right now, we see that we did create this area where price consolidated. And look at to the left. This was an area that was resistance. Now we're above it, could become support. So if we are looking for a short-term move to the upside today on an intraday scale, guess what we're looking for? A long position off of this 73.82 to possibly target 74.55. So that could be a trade setup that we're looking for on the S&P 500. Let's take a look one more time at the NASDAQ, see if it's also forming anything similar. Now, the biggest thing that sticks out to me that tells me that this is a no trade zone, a no trade day right now, is the shape and what we're seeing in the volume profile. We're not seeing strength and continuation. We're seeing what's called the D shape, right? And what that shows us is there is consistent volume all around. So we see that if there's consistent volume, we're range bound in the market, buying highs is not on our to-do list. Yo, what's going on, Ryan? What's going on, Ryan? How are you, man? Hope you're doing good, bro. Happy to have you here. Guys, drop some comments, show some love. We're so happy to do these streams. Just keep the engagement going. It helps YouTube push it out, helps Twitter push it out. Our goal with this show is to get 1,000 concurrent viewers. We want thousands of you guys in here. We're constantly dropping knowledge. This is a free stream for everybody to join. Extremely excited to do this. All right, let's see now. We got that pullback. Again, if you're confident in longs, sure, this might be the buy the dip opportunity. I'm not taking it myself. I do not have confidence in these buyers to hold. Market is the best anytime, bro. You already know. What's up, Dante? What's going on, bro? Yes, sir. Market is for the people, man. Market is for the people, made by the people. So look, this long setup could definitely play out. I'm not taking it. It doesn't mean you don't have to take it. I'm going to always be giving you guys proper setups, possible trade setups, break down the analysis and thought process behind them. If you agree with it, if it lines up with your own analysis, great, go for it. Risk properly. If you don't agree with it, guess what? You don't have to take it. I'm not taking this. I'm good. And same thing, guys. If I don't take this trade and it does play out and I just missed a 5-to-1 trade setup on ES, oh my God, I can't believe it. Okay, whatever. You know, it's dirt off the shoulder. It's nothing. That means nothing to me. That's fine. It's absolutely fine. We wait for the setups that are in our favor, that we know are in our playbook. And look at this. This trade setup is working. I hope that maybe somebody did agree with it, right? Make some money on that. I'm being patient. I know that a lot of people also were looking at previous days sell-off going, we have to sell off again just like that. Just for markets to rip them in the face and go, no, we don't. And we pull right back to the top of that range. The only way I would be considering shorts at this point on the ES is if we were able to break back below the data high. Yo, what's going on, A? What's your opinion on oil? Great question, man. Great question. I'm not a big fan, and it doesn't taste too good. I'm just kidding. Oil, CL. Oil has been very range bound, right? We know that it's range bound, but we also know it's elevated, and we also know it's not going anywhere anytime soon. Where did my rectangle tool go that was down here? It disappeared. I had another one. We'll copy and paste the, oh, no. Maybe that's what happened to it. Copy and paste that. We know that I had this set up at 84. Right, I have it at 84. I had it at 80. I think it's 84. Right over here at 84. There it is, 84. So oil right now is within a very defined range of 84 to 104. $20 range on oil. Massive, massive range. When we're in the middle of this zone, right? So here, this is the high. This is where I would consider selling oil. At the lows, this is where I would consider buying oil. Anywhere in between that, look at the price action we got when price was between that range. Extremely range bound, extremely choppy. The sell-off gets bought up. The buy-up gets sold off. We move lower. We move lower, we move higher. We've been in a very, very, very restricted consolidation on oil. Oil right now is the primary driver and the primary move behind a lot of these headlines. So what we noticed on oil lately, and we called this out in last week's episodes, is that anytime oil does find its way to these extremes, whether it's to the highs over here or to the lows down here, we end up getting a headline. So if we're at the highs, what does Nalab call it? What's Jeev call it? Damage control. When we're at the highs, oil's breaching $104 a barrel. U.S. president, it's like, oh my goodness, this isn't good. Let me release a headline, and it goes, boom. Okay, headlines comes out. We're finalizing a deal. We're not going to hit them anymore. We're so close to finalizing it. And then boom, market said, okay, cool. We'll take that as a good sign. We pull back. We move back to the extremes. We get a headline to the opposite side. We're going to hit them harder than ever. They won't see it coming. We're going to destroy them. Whatever it might be. We're in the middle of that range. We're currently trading near the low of that range. I'd be a bit more concerned that we get a headline that says, hey, we're going to attack them again. And guess what? We already got a headline like that, right? We got headlines like that last night. We could search this. Iran. We're going to scroll down real quick. It was 11 hours ago. U.S. struck nearly 20 targets in Iran, U.S. officials says. I'm sorry, striking them in a ceasefire? Does that sound like a ceasefire to you guys? That doesn't sound like a ceasefire to me. So we do. We take that information. We take that knowledge. We understand what headlines mean what and how important it actually is. Now, we just got another headline right here. Let's see. U.S. consumer inflation. Gulf ministerial consul condemns Iranian attacks on Bahrain, Kuwait, and Jordan as aggression against. So, ooh, this is tough, man. Things are picking up again. Again, these are all more bullish headlines for oil and more uncertainty drivers for things like the S&P and NASDAQ. S&P giving us one last dip opportunity right here before it possibly moves higher from this zone. Again, not a trade setup I'm interested in. I do not want to counter trend or fade this market to the upside, knowing that we have a lot more economic data bringing us back lower. What's the data high and low you're referring to? What's up, Brian? Good question. So the data high and data low, this is from CPI. So CPI was at 830, which we know, and it creates a lot of volatility. So it gave us a wick lower, this big wick to the downside, and then made its way on higher. So what I like to do is mark out that data high, mark out that data low. That gives us our current range. When we break above it, if we hold above it, then yeah, we're looking for that trend to the upside. But if we break that high, say we broke the high, we consolidate, we range back lower, then guess what? I'd be looking for a break back lower, retest, and take that short to target that data low. Now, something else that I like to note and keep an eye on when it comes to these economic events is watching that data low if it doesn't get taken out today. If it doesn't get taken out today, I'd really be more interested in seeing price chop its way higher today, chop its way higher overnight. PPI comes out, we get a quick spike up over here, and we get a huge dump because PPI is definitely going to beat expectations. Don't take my word for it. Take a look at market and keep an eye on that as well. I'm getting some people telling me to keep an eye on gold. Seems like gold is retesting an area. Or is it rejecting an area? Let's see. So yeah, that's what I'd be looking for on ES. If we don't come back to that data low today, I really would think that we're going to make our way back there within the next few days. And you guys could join market in the morning every day to see if that occurs. All right, let's see. GC. No, GC did not pull back to that 42.29 area I was looking for, but it is starting to reject from that selling point. We did put out a XAU USD. We did put out a short position tool out there to show that sellers were stepping in at that point. I did not take this short myself. If you guys did take anything, definitely let me know. Drop some W's in the chat if you're making some money today. But great knowledge, great information today, great show. Great guests today. We had Nalab on. Again, run that like button up for Nalab, man. He's one of the co-founders and CEOs of MRKT AI and just really created a fantastic platform. Today's his birthday. And I think he said the one thing he wanted for his birthday today was for the Market in the Morning show to hit 70 likes. So you guys are going to have to keep that like button going. That's exactly what he told me in the morning. He said if we don't hit 70, we're canceling the series. No, I'm kidding. Never, guys. Never, ever. We're going to keep it running. Look at this, guys. Bang. That ES trade plan to the upside. We know we're counter trend trading it. I didn't take it. I'm cool with it. I'm cool with it playing out. That's fine with me. If you ever see a setup like this too, where you sort of like it, but you don't want to counter trend trade, don't forget you can always size down. What's up, Jack? Yes, sir. Great info. Thank you. Took the short, bro. That's what I'm talking about. I'd still be careful as it did not come up to my main areas that I wanted us to reject, but we'll keep an eye. XAU, yeah, XAU right over here on the right side, XAU USD gold. I'm not in any gold positions. I do think this is still a range-bound market. And it's not only I think it's a range-bound market. The economic data told us it's going to be a range-bound market today. Why? Because we came in the minimum and maximum range, and we came in directly on forecast. Now, I know I mentioned before, higher CPI, yeah, that is still more bearish for the economy, not looking too good for the rate hike and rate cut expectations. But on the other hand, in terms of day trading bias and what we're seeing, it's range bound. It's within that range. Think of it this way. If our economic data comes within range, we're probably going to get the stock market trading within that range. So very cool stuff. Great info there. Have to go, yo, absolutely welcome. It was a pleasure. Thanks for hosting the session. Lots of gold nuggets. Cheers. See you tomorrow, brother. See you tomorrow, guys. Again, we do this show every day, man. Monday through Friday. I host this show Monday through Friday with you guys. I either have Nalab on with me, Jeevan with me, Imre on with me. If you guys have any special guests you would like to see us bring on, definitely drop it in the comments. Let us know. And let's connect, guys. Follow us on social media. Follow the Market AI YouTube, which is the one you guys are watching right now. Follow the Market AI Instagram, which is marketai.insights. I'm going to put it in the chat right now. IG Market AI.insights. So follow that. Follow my personal Instagram is also going to be Trading with Kev. Always happy to post information and videos and information to my story there. And follow the Market AI Twitter account, which is also going to be market_AI. So really good there. Great information. And I definitely recommend too, guys, if you are on Twitter, don't just follow the Market AI Twitter, but follow it and turn on notifications, because we don't just have the Market AI terminal that drops information the minute it comes out. We have our Twitter that is ran by some of the best people I know, some of the smartest guys, some of the best Twitter people, I should say, in the industry, and they're always posting strong information, valid insights, and actionable trading information as well. Just like you see in the show, they post that on Twitter for you guys. So definitely make sure to go follow on Twitter and turn the notifications on. Guys, great show today. Great information. It is 10:27. I hope you all enjoyed the show today. Absolutely killer. We are a few likes away from 70, which is Nalab's birthday present. So make sure you keep that going and join us every day here on Market in the Morning. And if you guys are a market user, you can get access to Market in the Morning right here in your Market TV tab. And the coolest part about that is, guess what? When you go back to your dashboard, it minimizes the screen for you. You could be doing your own analysis, have Market running over here, and have our stream up in the left-hand side where you could keep an ear on what we're seeing. We could call things out when big things come into the market, whether it's a big headline, prices entering the zone or level we're looking for, whatever the case may be. We're here to help direct you guys, give you proper information, actionable market insights, and teach you guys the ways of the financial markets. Like Nalab always mentions, man, it's hard to trade financial markets if you don't know financials. ES continuing higher, did sweep that high that we were originally looking at off that 7,400 level and rejecting right off 7,400. I'm still not in any trades. I'm being patient. I do still, unfortunately, believe we are going to make our way towards 74.54. If this 15-minute time frame does not close above this level, though, which it's trying its best not to, it only has a minute 12 left, then yeah, sure, I might see this more as we're going to range bound back lower again. But right now, I'd be a bit more interested in possibly the longs. But right now, we're a lot more interested in not taking any trades at all. We have to be able to recognize when market conditions are in our favor, so we know when to possibly size in our full risk, and when markets aren't moving in our favor, where we know to size down and hold off on our trades. So this was ES. We could take one more quick look at NASDAQ as well. Remember, we were looking for this sweep too on NASDAQ. NASDAQ took that sweep level out, hit into that low volume area, and boom, instant rejection for 100 points right there. Did I take this? No, because I don't want to have a 150 point stop loss on the NASDAQ right now. I don't feel like it. I feel like that's a little ridiculous. I'm good right there. Thank you. But guess what? It's going to happen. When we see that we have volatility like this, you're going to have to settle for a 90 point stop loss, because guess what? Your target might be 400 points. So everything is relative to what we're seeing around price. Sometimes the best trade is no trade at all. Bro, couldn't have said it better myself unless I said the same words. That's absolutely right. Sometimes the best trade is no trade at all. You got to remember, guys, cash, which is no trade, cash is a position. Not taking trades is a position. This day is a fantastic example of possibly not taking any trades. Other than the gold short that we saw rejection off of this 4,200, there really wasn't much, especially in ES, especially in the NASDAQ. Just a slow grind higher, where the first 5-minute candle on NASDAQ was 250 points. This is mind-blowing, the volatility we're seeing. And guess what? Guess how we knew we'd get extra volatility? 2 reasons. We see how recent price action is trading, so we're just able to break that down and just look at the recent ranges. We could look at something like the ATR, like Imre was mentioning, that's the average true range. Or we could also look at the VIX. If you're trading the ES, you're trading the NASDAQ. If the VIX is elevated, which means it's above $20, that means there's extra volatility and extra uncertainty. And as we all know, if you've been a recurring viewer, you guys know that I like to say markets move off of 3 emotions: optimism, uncertainty, and surprise. Well, guess what happened today, guys? We didn't get surprise. We didn't, no surprise here. Market CPI came in within expectations. We don't have much optimism, so we're going to put that down too. Uncertainty. Uncertainty is on the rise. That's what's keeping me out of these long positions. That's what's keeping me extra patient in this market conditions. That's what's also giving me the insight to say, size down, size down, size down. I love this reaction here that we're getting. I wouldn't be completely against shorts. I would just really want to see something a bit stronger, like possibly a 15-minute rejection. We did get that. We did get that 15-minute rejection on ES here. So again, possibility of it selling off, yes. Do we want to be a bit more safe as traders? Absolutely. Can we take out this data high, get back below 73.67? Sure. If we can, then guess what? I'd be looking for those shorts targeting the data low. If we hold above the 73.67, 67, then guess what? I do think we're going to slowly chop our way up. For the rest of the day, we're going to range higher. For the overnight session, we're going to range higher. PPI comes out, blows expectations out of the water. Markets dump like crazy again. We get a similar price action to yesterday's price action, similar price action to Friday's price action. Sort of like markets are doing every other, right? We had Friday, huge sell-off with NFP. Monday was range bound. Tuesday, huge sell-off again with, that jobs data just continuing to put pressure on the markets because of the rate hike expectations starting to elevate. Then today, more range bound. Tomorrow, big PPI data, I look for markets to dump again. It's all about expectancy, creating those trade setups, and being patient for something to play out. Ladies and gentlemen, what a phenomenal stream. YouTube, you guys are 2 likes away from 70. I absolutely appreciate you guys, adore you guys, and love you all for being here. I love doing these streams with you guys. I'm a trader by heart, but an educator by heart as well, and really just a people person. I love giving that information, passing along any information I can, and just giving you guys that opportunity that I feel like every trader should have. Exactly. I'm looking for a sell in XAUSD, but right now I don't see sufficient confluences. I will wait for a bigger pullback. There you go, bro. 100%, man. 100%. This little short setup is working out at the moment. I do believe gold is just on a tear. It's going to continue to rip lower. We're definitely be more bearish on gold than the ES and NQ just at the moment due to their current price action we're seeing. Look at that again. NASDAQ holding up. We're leaving it alone. I'm in the market live. Where do I click the like button? What's up, Luke? So I see you're coming from the Twitter. So Twitter, there should be the heart button, the comment button, which like you did, but the heart button. And we always appreciate if you are here on Twitter to hit that repost button as well, to share it with your friends, explain to them, hey, listen, here's a free live stream for you guys to join every single day. They go over live trades. They go over economic data. This minute a news headline releases. There's really no other live stream that's free out there that gives you the information that we give you here. So take advantage of it. Enjoy every session. Come trade with us daily. We do this Monday through Friday. Guys, that was this episode of Market in the Morning. I really appreciate you all for being here, showing some love by liking, by sharing, engaging in the comments. You guys are all fantastic. You guys are a part of the market community just like I am, right? We're a family here with market. We try to make things work best in our favor. We try to give you guys the best insights, constantly updating market, giving you guys cool updates just like the Market AI Trading View integration. I'll post that link one more time for you guys so you have that. Let me grab that from the chat real quick. But yeah, if you haven't already, download that Market AI Trading View integration. It works on the computer version, right? So it works on the web-based Trading View, and you are able to download that and get the live news headlines right on your Trading View chart. And you could also get the economic calendar on your Trading View chart. So just make sure you set your filters up correctly. Today we had CPI. You could find that CPI year over year, hit our brain icon. It's got everything that our Market AI terminal has built into our Trading View integration tab as well. Not everything not everything, but economic calendar and live news in a sense of you're trading right now. Those are the two main aspects that you do need on your chart to be aware of. And when headlines come out, what's cool too is it gives you a notification on the right-hand side over here with that headline as well. So really well put together, fantastic engineering team on the back end, fantastic team here on the front end. Our social medias are growing strong. Everybody here is about community and growing together. So guys, last time, hit that like and subscribe. Drop a comment if you learned something today. I hope you enjoyed today's live stream. It was a bit more of a one-off Kevin stream today after Nalab and Imre left around 9:15. So I appreciate you all for being here. There we go. There's an example of those headlines popping up. Have a great rest of your day. Trade carefully if you take any more trades. Hey, are you guys still doing the giveaway from the comments on Thursday's live stream? Good question. Tomorrow we're gonna have Gvon and we'll probably have Nalab join after towards the second part of that stream too. So remind us tomorrow and we will definitely circle back to that giveaway. Absolutely, guys. All right, have a great rest of your day, everyone. I will see you all tomorrow. Take care, trade safely, and I'll see you later.